One. What's up, everybody? Christopher here, head trader, owner, all that at pollinatedtrading.com. Sign up for your free newsletter. Today, I'm with Carter Thomas, and outside of a couple of technical difficulties on my end, we're doing this way better version of the. I was only a few minutes before, but we had a little technical difficulties. We being me, and the operation, and had to relaunch. But Carter's been with us before, late spring, I would say, about the time Bitcoin was around somewhere between 6,000 and 8,000. I think we were both just telling each other how cool Bitcoin was, and as crypto people will do. And then fast forward, let's say that's probably 8 months. We're trading at 48,000 Bitcoin at the very second that Michael Saylor is sharing to corporate CFOs and whatnot today, I believe, doing presentations on how your company, your public company, can add Bitcoin to the balance sheet. A few days after it was announced that Elon announced that Tesla picked up 1.5 billion or something like that. And then, of course, my trolling tweet of Apple picking up 2.7 billion in Bitcoin, which didn't move the market the way I wanted it to. It was actually on some clubhouse, and the headline of the clubhouse was a bunch of it was saying Apple put in 2.7 billion. And the same people from 2017 still playing that same game. So it was a fun conversation. Anyway, Carter's with us. Carter's been a pretty long time. Actually, what's really cool about Carter's story is I think it was in 2017, you just started YouTubing every day about your experience of learning YouTube, or also the internet, and how to speak, learning your way through crypto and kind of building your knowledge base in public. And that's really what where he came from originally there. And the last time we spoke, he was very big he was talking about DeFi, and I was kind of nodding my head as in, okay, yeah, another thing that's going to happen, whatever, Bitcoin. And then, DeFi pretty much exploded shortly thereafter. So we'll definitely give credit to Carter for that. But I want to dig deeper back into, because we now got people who are sitting on a $48,000 Bitcoin and $2,000-ish Ethereum, or $1,800 Ethereum almost. A lot of money has been made in the last 6 months, and there's some massive opportunities to be made in the DeFi space. So I got Carter on. We want to talk about what he did in the space, and then we're going to walk through the process, and then we'll kind of break off and get into some other subjects. So Carter, welcome, and tell me about your journey into the DeFi land.
Sure. Yeah. Great to be back. It's been awesome. Obviously, I came into crypto in 2000. I started buying Bitcoin like everyone else, 2013, 14, whatever. And then went in heavy on Ethereum in 2016, but I had no idea what I was doing. Like you said, I just started YouTubing every day because I was like, you could see these old videos of me being like, hi, I have no idea what I'm doing. And I'm just going to sit here and like walk you through. And when I look back at, a lot of what I learned was just kind of like market management, mindset management. But I didn't really understand trading at all. And what I like about this cycle is that I can look through the lens of a trader, and through almost like the business operations of these markets, as opposed to just being like, wow, this is a meme that sounds really good and it's probably going to triple, and then it does, and you think you're a genius, which still works obviously. But what I liked about DeFi was that it was very sophisticated concepts from the financial world that were being brought into a whole new ecosystem. So yeah, when we talked, I was starting to get, the first one was, I believe, synthetics that I really got into, and Lend, which is now Aave, and then Yearn. And when I started to play with these, I was just like, I couldn't believe what I was seeing. Like, it was so amazing and so cool. but it also seemed unbelievable because these yields that were coming out were like tens of thousands percent APY. I mean, I'm sure anybody who remembers the Sushi Swap launch, and people were talking about farming different types of food and saying that they're making 18,000% yield every hour. And you're like, what does this mean? Like, this is insane. And so instead of writing it off, I just dove really deep into it. And I found that there's a whole new way of looking at markets that are looking at yields within markets. Whereas a lot of the crypto spaces thought of yields the way proof of stake does yields, which is inflationary rewards like Cosmos and Tezos and Polkadot, which you can staking in exchanges and things like that. These yields are built off of trading fees, which is essentially getting like real-time cash flows off of whatever the protocol is doing, or like management fees, so to speak. That's like one way to think about it. And so I started to realize this is more like a bond market than a yield market. And these are just like insane bond yields for what would be the governance area of an ecosystem. So if you thought of a particular part of crypto and you said, okay, if we wanted to make a bond market in a free market, what would that look like? And what it would look like is what we're starting to see with DeFi. There'd be collateralization. There would be people that provided the credit. There would be people that had the debt. It would be the payments on those things. And so that was helpful, especially when I learned about Yearn and all these other ones. And it's evolved, obviously. Like some of the yields have come down, some of the yields have gone up. There's still a lot of bullshit out there. There's some really legit stuff. I do think that over time, the yields will normalize once the growth of the ecosystem starts to hit its outer, maximum growth capacity, and enough money flows in. But for the time being, I think that there's a very good case for these yields to continue. And for people that are in this space who start to learn about it, it provides a really interesting opportunity, one, to make money, but two, to leverage the assets that they already have, which I think is kind of how we connected a few weeks ago in a tweet where you talked about having a way to make money, and yours is a trading strategy, and mine came from kind of left field with a much different approach, where I said, well, if you take a big sum and you collateralize it, and you can pay that off in a high yielding vault or loan or whatever you want to call it, you can make a ton of money that way. There are different risks, different rewards, things like that. And there's a lot more to DeFi, but for now, I think that for most people, it just offers a lot of interesting ways to interact with the ecosystem and make a lot of money without necessarily having to buy low, sell high.
Yeah. And that's definitely the challenge that the majority of traders face, is the ability to buy low and sell high. When do you exit, all those sort of things. That's the one of the biggest challenge in trading. So let's jump in on, let's figure this out. I'm going to ask you to help me figure it out. Cause
Sure,
I
totally.
did not jump into the space. I feel like a genius because I put my Bitcoin on a place called Blockfi, let's just say. And here's my code, here's my, password, and, like, hack me. No, I'm just kidding. So let's say you go out and I think BlockFi is the most well-known of the lenders of crypto. And I haven't really looked of like, put your Bitcoin here and we'll give you, I think it's like 6 or 8% on your money, while it increases in value. So you're not actually you're not actually doing anything other than you're giving it to them and they're doing stuff with it probably. But I'm sure there's all sorts of risks there, but that's the easiest way to do it. So let's say you go out, you put 50,000, well, it's 48,000. Let's call it 50,000. You have one Bitcoin, you put it on BlockFi, you borrow 25,000 of it, half of it they'll give to you. And then you have a repayment loan. I don't know what the amount would be. Maybe, but I don't know, a couple grand or a grand, a couple $100 a month.
Yeah, I think it's, I mean, I think it's only like 5%, but what's good about BlockFi is that it's not an amortized loan like a mortgage would be. So you don't pay like the principal plus the interest each month. You just pay the interest. So if you had a $25,000 loan and it was, you took it out, I think 5%, let's say, that would be a $1,200.
Yeah.
And so you would pay like $60 a month as opposed to the full amount plus
that
$60 a month. So that gives you a lot more flexibility.
And cool. And let me, you still own the Bitcoin on that. So if it goes to 100, right, you've taken out 25,000, you pay back 20. I mean, you still make, yeah. Okay. So this is definitely a great option. So, so at 25,000, now you've borrowed 25,000. Now you look to stake it, right? Do you wrap it or do you stake it? Maybe those are a couple of things we want to go over.
I think the first thing to say is you do own it. You also have a liquidation price. So one of the decisions you make when you take out a collateralized loan is if you take out 50%, your liquidation is going to be a certain level. If you take out 30%, it's obviously going to be a lower level. So I always tell people if they're going to go this route, you typically want to do it when you think Bitcoin's like towards a low, right? Because the last thing you want is the price to be going down while you're taking out a loan. Like that just gives you anxiety. So that's the first piece. So yeah, let's say you take out 25,000, they're going to give you most likely 25,000 in USDC, a stable coin. And then you have the USDC and you have the ability to take that and go into the DeFi ecosystem. And in my opinion, what you would do is go put it into a platform or a farm where you could get a yield that was higher than what you're paying on your loan. And then each week or each month, you would take the rewards from that farm that you set up and it would pay off the loan. And then eventually, once the loan is paid off, you can keep the farm there and it just keeps spitting off whatever rewards are. You can move it to somewhere else, but you're essentially paying it off in real time. It's kind of like a way to pay off your leverage while you take out the leverage.
Okay. So I have that, take the money out, 25K. And then I'm paying $60 a month, let's say, and I go and I create a farm. And that paying, what is I've been seeing like 12% is Polkadot. Is that low end? Is that high end? What are we looking at there? What are some names and what are some, just off the top of your head, maybe?
I mean, it really is about, so there's two things to think about. Like, let's just put risk profile aside for a second, which is a huge deal, but the two ways to think about it are you going to yield farm off of an asset where the asset itself will appreciate or depreciate as well as you get yields on top of it, like a Polkadot? Or do you want to just go straight stablecoin arbitrage where you could just go get better stablecoin yield somewhere else, which will most likely be lower, but there's a lot less variability. And so the second one, like if you just want to do straight stablecoin arbitrage, which you could essentially do with as much money as you wanted, you go to something like Curve, curve.fi is, it probably is the biggest at this point stablecoin liquidity provider in DeFi. And it's the ugliest website you'll ever see. It's very unintuitive, so it's going to take a little while to figure out what's going on, but there's videos and stuff.
Kraken has a competitor now, huh? All right.
Yeah, exactly. And you choose what stablecoin pool you would want to go in. And you essentially do a swap where you would swap your USDC for whatever, and then you would deposit it into that vault for those particular stablecoins. So what that may mean is you take your USDC from Blockfi and you swap it, or you deposit it into the synthetic USDC, which is the synthetics network that yields 12% or whatever it may be. And you just deposit that, it pays you out in SNX tokens and Curve tokens. And then each week you harvest them and then you sell them on the open market and then you pay off your loan. So that's stablecoin arbitrage. That it's a smaller piece, but it's much more consistent.
So
Whereas,
you're taking a 5% payment and a 12%, or you're paying 5% on your loan and earning 12% on your farm.
yeah, yeah, exactly. And you can go out further on the risk curve, and you can find stablecoin farms that will pay more like 30, 40%. You're just assuming more risk because it's like maybe a smaller coin or whatever it may be. In a bull market, that may be a good idea, but you know, you kind of take your risks in that way. So that's like the easiest to understand. Gas fees are obviously something to keep in mind, but we'll just assume that they're free. Like we're just not going to think about that. Um, and so then the other piece would be that you take it and then you go find actual farms. Like you go find coins, you go find liquidity pools, you go find different areas where you can buy and stake particular assets that may have APYs 60, 100, 200%, because they're relatively young or smaller market cap. They don't have the same liquidity depth. So your liquidity is worth more, but the trading volume will continue to increase. And so you make more money. So you're taking more risk on the asset itself, but you're also going to potentially make way bigger yields. And so if you put these two ideas together, if you could find a high quality asset that's relatively small, that you really believe in, that seems like it's very safe and very legit, you can get a high APY, it's relatively low risk. That can be a really effective way to get something like a 50 to 100% APY on something, pays off the loan, and you get something that you actually want to hold on to for a longer period of time. It's not just a short-term thing.
Gotcha. So, okay. So let's say,
I know it's kind of complicated. There's like a million pieces to it.
yeah, well, that's the way it should be, right? It shouldn't be easy for people to just, come in and cause, make what, 12%
Right.
monthly at a 0% interest rate environment. It shouldn't, it should be most likely a little bit challenging there. And in any new technology, of course, the UI is just going to be, a challenge because you're doing the back end stuff, right? Like ICO world is obviously the first thing that comes to mind when you think, oh, this is the new ICO type craze, is because you're printing out of thin air somewhat. I guess the analogy would be, but there's actually tokens behind it. There's proof of stake. If I
Well, yeah, and
recall.
I think that's the key, right? Like this is one of the things that I didn't realize, is that the yields come from the trading fees and
Mhm.
also from the management fees within the ecosystem. So for every trade that token does on, let's say, Uniswap,
Mhm.
0.3% of that trade amount gets sent to the liquidity providers, which would be, someone who's staking their coins. So if you think about it, if you have a coin where there's very few people staking it, so it's like a small market cap, but all of a sudden there's a lot of trading volume, you're going to receive a percentage of that fee. So it's actually closer to owning like a cash flow business, and you're just a early LP. Like you're an
Mhm.
early partner in that, as opposed to being like you're just part of a network that's growing, which is what a dividend stock might be more like. It's
Right.
so there's more to it, but to your point, the whole thing hinges on trading volume.
Mm.
So as trading volume goes down, which is what happens in bear markets,
Mhm.
all these yields are going to deflate too. And I don't think anyone quite knows what that floor looks like. Um, you know, we kind of had
Yeah.
a taste of it last winter, like,
Yeah.
October, November, when we saw the DeFi start to collapse a bit. The yields, some of the ridiculous yields came down, but some of them held pretty strong. But I do think that it's not a guarantee. There's going to be a lot of flexibility in these.
Yeah. Yeah. Well, that's, the first thing that's really exciting, we even, getting into that space, just thinking about the fact that you could take, an appreciative asset, as Bitcoin or Ethereum or whatever, and borrow against it. Just that right by itself, opening that up to an average human, because trying to do that at like Interactive Brokers, or I think you need to have a minimum of $100,000, maybe it's 250 or something like that, to where you get portfolio margin. Um, You can do that on, I don't know, what, $1,000, maybe $500 or something.
Yeah, anything you want.
Take dollar cost average yourself into, the Bitcoins or the Ethereums or something like that on a place like Blockfi. And I'm just bringing up Blockfi because I know them the most. And they're who I usually recommend to people. So I haven't really looked at what competitors are out there, but yeah, you borrow against it. Like think about how many people. There was an article today on Cointelegraph, I think, where somebody in 2013 paid 91 Bitcoin for a Tesla, which is 4.5 million today. They're like driving around their $60,000
computer.
Yeah, that's pretty impressive. But we didn't have those options in 2017, 2018. I don't know of if we did, actually, to where you could borrow against it. You had to find somebody who was willing to do that trade with you, right? There wasn't a infrastructure and a business that you could sue. At least there is legal recourse on, at least now, with a place like BlockFi. If something were to happen, whereas if it was just, me writing a check to you, and, person on person lawsuits a lot, as a husband of an attorney, a civil litigator, she's going to be like, yeah, suing Chris, there's not a lot of outcome there. Suing a big corporation, there's a lot of money to get to there. They've got insurance and they've got all these other things. So it de-risks that space quite a bit, which probably is what has opened up the whole that whole ecosystem. And in my mind, I'm just sitting here thinking of a modern asset manager, hedge fund, whatever. They've got analysts, they've got compliance, they've got attorneys, they've got accountants, they've got the portfolio managers. They got their sales and marketing. They've got all, this whole big operation. And then as you're talking about, in my mind, I'm thinking about, well, this is what a modern, like if we didn't have legacy financial systems and marketing machines and like pumping systems such as, live TV of people in suits being interviewed about, making 12% over the 10% returns of their benchmark. Do you have an idea of what you think like if I was to say, Carter, let's start a modern fund. We're likely not going to raise $20 billion and lose it by shorting GameStop because we're not that smart. Let's just say we can raise $10 million and what would that do you have an idea of what that would look like, of what because a crypto manager 3 years ago was just buying and selling crypto, right? What would a modern, like if I was going to launch a crypto fund today, it seems like the smarter way to go about it is to guarantee the asset some way, right? So it's trust, it's in a trust, or it's custodian or something like that. What would be a way to turn this into a business in that sense? Like, say, I don't actually want to do this work, but can I get somebody to do it? And, in exchange for it, you get your management fee or whatever. Do you have an idea on that? Sorry.
Well, yeah, no, I think it's a good question. I think that,
is that a possibility? Would somebody be able to do like $10 million, $20, $50 million?
Totally. I think it would be hard. The hardest part about raising a fund in that sense is that it'd be very hard to forecast out, because we're kind of going into uncharted territory. So you could say, yeah, like I'm going to go become a huge liquidity provider for XYZ coin that's got an established market cap, and here's what the rate is. Here's what the average rate is for the last 6 months, and here's what we project it to be, and you can kind of extrapolate the impermanent loss and whatever else it may be. But you just don't know what this whole thing looks like if we go into a bear market. Like there's just nobody knows, and so from a fund standpoint, it's hard to do any sort of reporting or forecasting, because you're going to get probably more volatility than if you just bought coins and held on to them. So I think what the play would be would probably be to find smaller companies, or I mean companies, just like coins, networks that you believe in. You invest those coins, but as soon as the ability to stake within the network becomes available, and you could start to get a governance fee, the way Yearn does, or any of these governance tokens do now, you can be a very early piece of the company. And so not only will you get the capital growth, capital gain, you'll be getting a very large yield, because that's just how the tokenomics are built these days, as opposed to 2 years ago that wasn't. It was inflationary rewards. Now it's governance rewards, where people are paying to use the actual ecosystem. So I think you could build that out into the forecasted model. I think if I was raising a fund right now, that's definitely what I would do. I mean, I would always find something where it was a long-term capital gain potential, but it also had a huge yield potential, so I could compound those gains along the way. I think it'd be crazy not to do that.
Yeah. Yeah. That's interesting. It's very interesting to think about what has happened just in what, 2 or 3 years, almost like a year, really. I mean, I know these projects have been on board for a while, but yeah, it's really interesting to see how they've emerged the space from not scam ICO. There are some great projects that ICO'd for sure. It's unfortunate there were some that just, whatever. We don't need to go too far down that path, but you de-risk a lot of things when you look at using cryptography in trustless environments to run the financial ecosystem. Ironically, it's harder to get capital in that space because it's hard to put your head around, I suppose. But it's very easy to get money into a fund that's again going to short GameStop.
Well, I think to your point, there's nobody to point at. There's nobody to sue. Like if I go on DeFi and I collateralize something, and there's some hack, or there's some bug in the code or whatever, and I lose that money.
Yeah.
Like that's my fault. Like, or not my fault, but that's my problem.
Yeah.
And I think that when you get beyond personal funds, like that's an unacceptable risk for 99% of like real money out there.
Yeah.
And so I think that places like Blockfi, Celsius, some of these more centralized versions of them, they're trying to bridge that gap. I mean, Grayscale's trying to do it as well. But for the most part, this is an individual or a very nimble small VC world. They may have a good amount of money, but it's often because they've already made a ton of money in crypto that they can reinvest, and they're given like, hey, look, do whatever cowboy stuff you got to do. We understand it, but I think that's the exception right now.
Do you? So you would generate short-term capital gains on those on the farming? Is that right?
That's right. Yeah, it'd be considered income.
Okay,
like a dividend, basically.
So and it would be considered capital gains, not like business revenue, I assume. Well,
that's probably like you can ask your qualified professional tax
correct
whoever, because there's a lot of nuances. Like you can generate them, but if you haven't claimed them, they're technically not yours yet. You got to like actually claim them off the blockchain. So you could do that weekly. Sometimes they're automatically claimed for you. It just depends on the contract. So there's different, like these weird nuances. I don't think anybody really knows the exact way. But yeah, it's essentially like getting whatever airdrops would be, or, stuff like that.
Yeah. Yeah. What, so, I mean, I've tried not to go too far down. It's impossible to not go down deep rabbit holes when you're talking about those unique projects, right? Because pretty much if you don't understand Bitcoin, then you can't start to understand Ethereum, and then you can't start to understand, like down the stack. And, we're already pretty far down the stack when we're looking at that. It's pretty, it's pretty amazing. What projects are you excited about these days? What space you pretty much were ahead of the curve on DeFi for a lot of people. What else are you seeing these days?
I'm very bullish on this whole idea of collateralization. Like when I think about, I think this might be a little bit too far ahead. But when I think about the amount of things that every one of us owns that we cannot tap the value of, that to me
Mm,
is unbelievable, right? Like you look at the average family, let's talk, in the US, uh, and average, let's call it upper middle class family, which probably has people that have heard of Bitcoin or whatever it may be. They've got a couple cars, they've got a house, they've got furniture, they've got artwork, maybe they've got, you name it. The house is basically the only thing that they can really leverage with a mortgage.
yeah.
Um, Maybe if they go get like a life insurance policy, they can leverage that. You can get creative about what assets you put, but that's when you get into weird tax stuff. That to me is insane. Like we've built this world where you buy all this stuff and then you just assume we've just been trained to assume that as soon as you own it, like unless you want to hustle and go on eBay and resell it, it doesn't have any value other than usage, utility. And I think that's going to change in a big way, especially as we become more of a shared economy, especially as things become tokenized. Like you look at car companies like Tesla, I think that being able to buy a Tesla with Bitcoin is amazing. I think what's going to be more amazing is if and when they can take that computer and they can assign a real-time value to it. And you could press a button and say, listen, this Tesla's worth $60,000, but I really want to go on a vacation. I'm not going to be around for 6 months or whatever. Press a button. I'm going to collateralize $20,000, securitizing this Tesla as collateral to this network. Maybe it's centralized, maybe it's decentralized, who knows? And I pay 4% on that $20,000. And all of a sudden I have $20,000 in value because I own the Tesla, and I pay that back to the network. And I think that Tesla's, like, just because of the nature of the business, it's kind of it's pretty far out there to be able to do that. But we start looking at things like, if you have a $5,000 computer, why can't you securitize that? If you have anything that you can assign a real life value to, and then you start to get pretty creative about what that could look like with your real estate or with anything that you own. So I think that the guts that make those things happen, that's essentially what's built the financial system, right? Like it's like what the mortgage industry is. And when you look at when the financial world exploded, it really started in the early 80s when they realized you can securitize anything. You can wrap a thing called an ETF around anything you want and tranche things together, and voila, you have trillions of dollars. And I think that exact same process is going to happen on an individual level. And I think when that happens, it's going to be just like anyone's imagination could take that where they want to go with it. And being able to be a part of the network that delivers that value is going to be an enormous win. I think right now the best bet is Ethereum because that's where everything is at this moment. That may change, but I think that's probably the best pure beta play on that. But then you get into the lending networks, you can get into the actual liquidity pools, you can get to the exchanges, the tokenization, whatever it may be. So I think that's probably the biggest idea. I don't know how or when that's going to happen, but if I was going to bet on anything for the next 5 years, it would probably be that. I think in the short term, the most interesting thing is probably trading itself, like the trading world, where I think this GameStop thing, it's kind of a meme, the whole thing, but it's also an interesting social experiment. I don't think we're going to understand what's going to happen about it with how many people are brought in, and then also where those people end up going. Do they stay in the stock market? Do they move to crypto? Like how do they feel about their experience? But I think that as you start to build out these new trading worlds, where you can stake your equities and make a higher yield off your equities, as opposed to, like you were talking about, you have to go to a brokerage. You got to have $100,000 now. Maybe you can stake your own stocks or whatever. You can build much more creative products. You can make your own baskets. You can run your own hedge fund. Like you can decentralize yourself and say, hey, invest in the stock, follow me, and I can set my 10, 2 and 20 on this. Like the whole trading world to me is very easily decentralized and opens up millions of new opportunities, new assets to trade, potentially new markets to trade. Like you think about anything that has a data feed. Like one of these examples I always think about. I was in Europe last fall. I was running through these wineries in Croatia, and I was doing for a long run. And I was thinking to myself, it's like if I wanted to bet on the futures market for Croatian wineries, there's nowhere I can do this. But I bet there's other people that would be willing to take the other side of that bet, or at least provide the liquidity for that marketplace. But that's never been done before. But somewhere there is a data feed that's saying, okay, here's the monthly output GDP. Same thing with the California wineries, or whatever it may be. But there's just no futures market for any of this stuff, or any market for that matter. Whereas if you can find a data feed for something that's, has integrity and, whatever else, there's going to be liquidity available. People will be willing to take the liquidity side of that bet for someone to be able to trade it. Mm-hmm. And I think that whole thing is just going to get bigger and bigger, bigger. We saw it with the presidential election, like how much interest was on the betting markets. We're starting to see it where, instead of doing sports betting where you place your bet before the game and it's a binary bet, all of a sudden it could be a liquid market. Like we're starting to see it in the Super Bowl where real time you're seeing the odds you can short and go long mid game as opposed to putting on a specific bet. So I think that whole world is a really good bet. And I think that probably more importantly, when I talk to people, hedge funds, private equity, money managers, family offices, most of which are relatively skeptical about crypto, like they get it. They understand that they might need to allocate, but they're also kind of like, When I talk about this stuff, this is the only thing that they're like, I understand what you're talking about. Like, this is something I get. Like I see what you're saying. All this other stuff, the collateralization, privacy, all the other things are like, yeah, whatever, I've heard it before, it's whatever. But the tokenization of markets is very interesting for them, which makes it very interesting for me as someone who can see what's going on.
Mm-hmm. Yeah. I mean, there's a lot to think about right there for sure. The news that, well, let's have a look at the Tesla idea, so ARK and Tesla pretty much has been, let's just give Tesla the thing here. They pretty much want to collateralize or turn your Tesla into an asset. It's a car. The only type of car that is an asset right now is a collectible, really, right? Nothing, unless you're actually earning more driving, Ubering, let's say, than the value of your car. That's the only really way that you're doing it. What they're saying is they're just going to turn it into an autonomous vehicle. You use the Tesla when you want to use it. And when you don't want to use it, you just turn it loose to the network, and the network goes out and drives people around autonomously. And you rev share with Tesla on that deal, with the network, right? So that's an easier, and I don't know if a lot of people understand that or know that, but that's a business plan, and that's something that's out there. So the idea is currently out there with the richest man in the world, and one of the most valuable companies in the world, is actually looking to create a network where you can turn a depreciating asset into an appreciating asset. Where that also gets interesting is, let's say, because how many GPUs do they run in a Tesla? You can turn it into a miner when it's parked, right? Plug it into the Tesla charger. You've got your solar wall or power wall. You've got your solar roof generating energy, and your vehicle, it may not make more than all that much, but if you would rather not have your car leave, now you have another option of how it could be done. And that's also, one of the big promises of crypto was the fact that you could earn money from your computer, right? Which once people realized that you could do that, then that got arbed out of the business, and you have to have like ASICs, you know, a underground layer of ASICs and or GPUs. And but the idea of, you know, that's the first easy idea, the Tesla idea of turning a depreciating asset into an appreciating asset is it requires threading a bunch of needles, one being autonomous vehicles. That's a, you know, it's in Phoenix here. We have autonomous vehicles on the road now. Something, I don't know how many trips they've done, but it's happening. So it's likely going to happen. Then you start thinking of, okay, how can you rent out the SETI project was another example of it was a donation of CPU or compute to the Search for Extraterrestrial Intelligence. And they just, you know, ran calculations in the background of your computer. Those are kind of like two mainstream, maybe not for everybody, but for a lot of people in technology, those two ideas are not too, like you've heard them before. And in finance, probably if you're not an angry, cranky perma bear on Tesla, you probably have heard the bull case, or at least accept the bull case there. So when I look around my house, I start thinking of the idle energy that's sitting there, the lack of, you know, if I could just, I live in like a little neighborhood. I started to think about the idea of Tesla creating a neighborhood, self-sufficient neighborhood. And, you know, the idea being is everybody in the neighborhood has solar. You have so let's say there's 100 houses in this little neighborhood here. You have a battery pool and, or battery farm, and everywhere you can, you have solar generating into it. And you're basically, if you have an asset, and then you can sell that energy as needed to power plants, to other places. So that's where we start moving down the stack of, like, the home is real estate that's an appreciating asset you can borrow against. Cool. I think the idea of energy probably is not too far away, where you have batteries and you can sell excess capacity. If you're able to harvest water out of the air, not really in my neighborhood, I imagine, being as dry as it is here, but you know, I think that there's some interesting ways that. So just as you're talking about, I'm like thinking about, you always see like the cars driving down the road with a billboard wrapped around them, right? If that was digitized, and so if I, as an advertiser, if I could get the data back on how many eyes that, you know, and I got paid, not just, you know, $800 a month, I don't even know what they cost, but I actually got paid on, as you do a CPM, right? An ad model of, you know, that incentivizes the driver to continue to drive, right? And so you would have that with the Tesla. Anyway, so I'm just like thinking down the stack where some interesting places would be. That would be in a fantastic marketplace. As a business person who has a risk asset like grapes in Croatia, getting, you know, the Croatian wine market is not as well known as the one across the pond, I guess what it's called, you know, the Med to Italy. Like Italy is, you know, orders of magnitude more well known and easier to fulfill that supply chain of worldwide demand for Italian wine. Croatia has a much lower one, as does Israel, as does Lebanon, as does South Africa. You know, like it goes down. And if you're able to, like, I would love the ability to provide liquidity or hedge and get paid for my ability to provide hedging capability of a wine producer, right?
Mm-hmm.
You can do it with corn, you can do it with wheat. You can, I mean, that's what made one of the reasons that corn's such a massive market, is because they, you know, they can hedge. And
yeah, and like it could be anything. It could be any, like you could create a marketplace for LA traffic. Like if there was a way, if there's a data feed that shows potentially how much traffic is going through the 5 every day,
yeah,
you could create a market where people can go long or short on what they think the traffic trend is going to be that day, next week. You could create a whole,
the incentive
like,
there is awesome too, because you could literally say that, you know, I'm short LA traffic, so I'm, you know, I'm going out to drive today, or I'm not going to drive, you know, whatever the
right.
per movie. You could actually artificially change traffic patterns, I think, in an interesting way. That's an
Yeah,
interesting.
exactly. Like these whole, like, and that's where the arbitrage will come, is when, like, how hard will people try once there's liquidity to anything? What's the actual market value? Like, we just don't know. Like,
Yeah.
how big does it have to be? How much liquidity does it need to be there? And I think to your earlier point about going down the stack, thinking about things in like a CPM model, I think that that's going to happen. But I think what DeFi can do is that it helps you wrap up the actual core value. So if you're producing 0.002 kilowatt hours a month, or I don't know what like, you might get paid $80, right? And that's your value. But what DeFi would say is, well, if you can make $80 a month off of that thing, the thing that's making that can be amortized, and it's actually worth like 14,000. So you could take out a $6,000 loan today and not have to wait 26 months. And they got to figure out how, like, the collateral is like with physical products. And then what's even more crazy is you just follow the playbook that they did in the 80s, where it's like, okay, well, if you've got a $14,000 valued solar setup and you live in a neighborhood, how would you like it if we tranche you all together, and then you can all get a piece of this tranche? We'll go out and sell it and give you guys a kickback on the yield. And all of a sudden there's even more value produced or financialized, or whatever you want to call it. And that's exactly what they've done with everything else. It's just that they're like, we're going to do it with everything else. This is 100 times bigger. And so I think that as it's all been done before, it's just been done on a very small subset of groups that's been regulated, and they've just never been able to create these things.
Yeah. Wow. This is this is pretty cool. I made the step with solar and with Tesla. But yeah, I mean, we know the prediction markets are definitely growing, and with the use of code to actuary these sort of things to provide risk and figure all that stuff out. You don't need the smartest person in the room to actually perform at 2 a.m. on a Sunday. You just need the network to be hard.
Yeah, like those. So the things that kind of bridge the gap between real world data and blockchains are called oracles. And there's a handful of them working on it. Chainlink seems to be the leading horse right now. It's a very difficult problem for obvious reasons. But if they can figure out how to do this, where you can take any real world data set, somehow that's agreed upon, it's like a legit data set, and get it into a blockchain. What's going on in DeFi right now is they're figuring out how to build liquidity pools, right? Right now it's with Uniswap and SushiSwap and a few others that are kind of, in my opinion, it looks like a very good first draft, but then you might get some single-sided liquidity pools like Bancor's trying to do this. And then you might get some much bigger liquidity pools, like with Curve and Yearn and Synthetics and all these other ones. And they're going to figure it out. Like, liquidity is just going to get cheaper and cheaper and cheaper. It's going to get deeper. And then once you start bridging these two things together, that's when the fireworks go. And it's just going to get so big. And that's when you're going to get these investment banks that are like, this is our chance at the 80s. You're going to get the whole world of young guys, or men and women, that are like, oh, you got the bond market in 1982. Like, I'm going to tranche the solar panel market or whatever, on DeFi. So
it feels like the solar market is probably like easiest to do, right? Easier to do at the moment. Maybe I'm just stuck there, but first of all, if I'm on gigabit connection here in my house, why is that excess capacity? It's still, it's on demand, but there's a whole, like, if I'm currently 1.6 megabit per second that my laptop here is consuming. So I've got, let's say, 5 devices in the house. So I'm at like 7 to 10 gigs or megs a second out of a gigabit connection. Like, there's a lot of excess capacity that has been relatively untouched there. Electricity, as you say. It seems like that would be a priced market that would bring as you mentioned, the investment bankers and private equity. I have a neighbor who has a heating and air conditioning company, and just been around the business for 20 years. They're offering him $10 million for it. And they're going to package up 5 of them or 10 of them to turn them into one asset, and they're going to spin that one asset off to somebody, a bunch of investors, and and that's it. Like, that's what they're doing these days, right? And that's a very non-traditional game. Like, it's not, when you think of private equity, you don't think of grabbing a handful of HVAC and plumbing companies, right? You don't think of that. You think of like maybe software, but definitely like retail and playing in that game. So they're looking at other stuff. That's obvious. It really is an interest. Maybe I'll get somebody in the, do you know of anybody in private equity or investment banking that's involved in blockchain, or are they just so busy? I haven't really heard too many of that. It sounds more of a VC game, but
private equity, not so much. Like,
yeah.
and it's really not because of blockchain. It's just because there's so much money to be made
elsewhere,
doing all these other things. Like, just dwarfs what's going on in blockchain. So, especially overseas, I think once either the public markets and the private markets, once those cool off, if they ever do, like, who knows what's going to happen over there. There may be more people that come to the crypto world, but for now, it's just like, it's kind of funny being in crypto. And I talk to a lot of people in crypto, and they're like, "Oh, it's growing so fast. It's so big." I'm like, dude, yes, it's great. I mean, as an individual investor, this is probably the best place to be right now. But this is a drop in the bucket for, like, the entire market cap is like a rounding error in the grand scheme of things. So
it is, yeah. It's one stock. The entire market cap is one fairly decent sized stock in the equity markets. Yeah,
exactly. And I think that's what, when, as a trader, we're used to, like, taking profits at certain levels and being like 20%, 50%, 100%, whatever it may be. Obviously, that's a good strategy for building long-term gains and compounding your wealth. I think also balancing that with some of these bets where it's going to be almost impossible to get any one of these right, to know which one's going to be the one. I think right now Ethereum is probably bubbling up to the top of the list, like, other than Bitcoin, that's kind of its own ecosystem. And just realizing that this is still going to take a long time to properly unfold. And if and when it does, it's going to be way bigger than what it is right now. And that probably is going to translate into much higher prices. Meaning sometimes it feels like you look at the charts and this is like, holy shit, it's going vertical. But if you start to look at the greater global financial system, in terms of how much money is out there right now, like, it's mind-boggling how the size of the deals these guys are doing. It's like, and then you come back and you're like, oh man, I'm sweating over what, this, whether Ethereum's going to go to 2000 or not, or should I take profits at 1800. You're like, wait a second. Yeah. Like, this is a bet on the future of everything, basically. It doesn't need to be a big bet right now. So I think be a trader, but also have this futurist investor mindset, because, I think that there's a very good chance that this could go huge.
Yeah. Yeah. Well, and we've just barely been around, right? Handful of years here. It's pretty impressive what we've been able to do here.
And it's going to be like, next year will look totally different than this year. And then the year after that's going to look totally different than, and so if anyone when we were talking last, if you had said, oh yeah, Bitcoin's going to be at 48,000, Aave is going to be at 530, and Ethereum is going to be whatever it is, 1,800, we would have been like, you're out of your mind. Like, there's no way. And, and the S&P is at 4,000, you'd be like, there's no way.
Yeah.
And so in a year from now, all signs are pointing to, it's going to be some even more craziness. I don't know if it means the same trajectory of price increases, but the innovation is not going to stop. There's no way that innovation is going to stop.
Yeah. Well, yeah, we have to. And it just keeps getting better and better. The interesting thing is, uh, how constrained we are on chips and
Right.
just in the world. And this is where it's literally like, the automakers this past month had to pause production because they just couldn't get chips for their vehicles. Like 10 years ago, that didn't sound like reality, right? A year ago, you were like, you're saying Tesla can't get chips for their vehicles? Like, no, GM, Ford,
Yeah, everybody.
Volvo, like it's, you're driving a supercomputer. Everybody talks about a supercomputer in your wallet. The car is definitely one of them too. But yeah, it's a very interesting, and the amount of work that needs to happen. It's so exciting. And it's, you know, just the things that could be accomplished through a blockchain, through a network. It's there and it's
Yeah,
still so far away.
I think it's also, I think one of the kind of the, one of my core beliefs and ethos is just how much the whole system has been rigged from the beginning. And I'm not anti-system, anti-capital. I'm not, none of that. It's just, we've just been convinced that just like, this is what you should expect. Like if you get 7% on your index fund, you should be happy about it, while they can charge whatever they want on a mortgage and on a credit card. And like the middlemen have built this huge moat of money in the system. And so I think one thing to keep in mind for anybody listening to this is that it's not that DeFi is just making money pop out of thin air. It's taking this inefficient money that has been systematically like convinced to the public that this is how it is.
Yeah.
And it's just taking that money back. And like when you think about how much money that is, like the size of those industries, it's ridiculous. It's huge. I don't think it's going to be like they're not going to roll over and it's like, oh yeah, no big deal. But I do think that that's the way to think about it. Is like this money it already exists. Is just built into a system designed by people that wanted that system designed that way. And if and when it breaks down, it's going to go into a system that benefits, hopefully, the individual and the consumer.
Yeah. Yeah. Well, and that's what we think, right? You've got how many people will get paid along the way of you throw your money into a like JP Morgan Chase investment account or whatever. How much money for every dollar in there? How much money is actually like along the way? How many people are making money on top of that? Like borrow, they have the asset, so they borrow against the asset, they loan against the asset, I should say, and then they charge it fees on that. And they charge it all there. Whereas you can just have a processor do the work for you of all those other people along the way, including their office building, including their advertising campaigns, and everything that goes along with that. So that's very interesting to think of, unpacking all of that and outsourcing all of that work to to something
Smart
like
contract,
this.
yeah.
Just a simple phone to handle the work, a processor and a smart contract. Amazing. Look, we're running up over an hour here. Is there anything you wanted to cover? Anything else you wanted to throw out? I'm happy to keep it going for the next 5 hours if you want, but I don't want to take up your entire day.
Yeah, I would say, I'm sure some people are thinking about like, okay, what do I do? How do I kind of take advantage of this? I think the reality right now is that gas fees are extremely high. So to be on the ground, boots just charging into DeFi is going to be difficult because it's so expensive. But I would encourage anybody to just start digging a bit into, just go on Google or CoinDesk and just like go down the rabbit hole for a day or two just to learn some of the big names, how these liquidity pools work. Because I do think that the biggest like opportunities over the next year are going to come from this world. And I think Bitcoin is going to continue to be the bull that drives everything. but if like there's such an edge in being able to just understand how these things are playing out, get into the discords, go into the Telegram groups, see what the developers are talking about, how these things work. I think anybody who's in the crypto world already maybe thinks like, oh, DeFi is kind of like the ICO thing. It came, it went. What's the next thing? And what I would say is like, it's just going to be this. It's just going to be an evolution of this, because this is as big as it gets. Decentralizing the financial world that's it. There's nothing like that's it. So it's less about thinking about what's next and more about how does this turn into something bigger. And I think that'll yield some pretty amazing opportunities. No
well, you helped me. You helped me for sure. I kind of came into the whole, well, at least our conversation thinking, okay, I made some good money on ICO, so I'm not a hater on farming and yield farming and DeFi and all that. But I did, in fact, I said it probably 47 minutes ago or so, like, what's next? And as you broke it down for, this conversation, it really became obvious to me that, yeah, we're just learning how to use electricity, basically. If crypto is a general term, is just getting to a UI layer that people can actually, Coinbase itself, they charge a pretty good amount to use their simple interface. And they've been rewarded handsomely for it. So just thinking about that in and of itself, as you mentioned, DeFi is kind of hard to figure out because it doesn't really, it's not clear. It reminds me of crypto, like pre 2017 for sure. I don't know if the 2014 thing, with Mt. Gox, I don't know if that was really good, but a UI layer or a UX layer that is approachable and you don't need to be a developer and a sysadmin or something like that to understand how the networks work and how everything's work. I think that, like any technology, is the step forward in the big thing. And if there's not even a UX that's easy and approachable, that means, using your logic there, we've got a long ways to go to where somebody like my mom, no offense to my mom, a computer scientist, but she's a computer scientist and she can't, she hasn't gone down even the Bitcoin rabbit hole. So she doesn't really, know that sort of stuff. And when you get average people who can do those sort of things, we're still waiting on people to be able to get a wallet and put money in their wallet from,
right.
So yeah, you know what, you definitely cleared that one up for me. And I am going to drop everything and get
I think
DeFi space.
One thing along the lines, I completely agree. I think the UI and UX is like a huge opportunity right now. BlockFi, Celsius, Nexo, all these centralized, even Coinbase, Kraken, and all these centralized companies, on some level, they're starting to use DeFi. In 6 months to a year, like they will be fully using protocols like Curve, and like that's how they're going to maintain these yields. It's just that they're going to give you a lower yield. They're going to arb out a yield to give the average person like, oh, who can I call if my funds aren't there? And so like that in itself is an opportunity. It's the same thing on the internet where it's like, if you want to go pay someone to build a website and they can host it, or if you could do it yourself, you could save a certain amount of money. This, like, assuming this was like 15 years ago,
sure.
It's that kind of thing where for a couple of days of education, you could actually, potentially bypass a huge long-term yield that would, pay for itself 10 times over.
Yeah, that's a great way to do it. I know that I could use Coinbase right now, but I know how expensive it is, and I can figure my way through a normal crypto world, right?
Right.
But
exactly.
most people can't, and that's the reason Coinbase is going public, because they made it simple. Right. They offered a handful of tokens and coins, and the whole world went there. Even during the ICO craze, where you could only get 5 or so on Coinbase, they still dominated everybody.
Yeah.
When, Binance was right there. You could have just used Binance, but
Exactly.
so that really is an interesting way to look at it, is like when you can get people access to that sort of stuff. That's fantastic. You got me, man. I'm going to share this out. Everybody's going to love it.
Cool.
We're going to have to talk more once I get
Yeah,
down. As I
sure.
start going down the rabbit hole, we'll have to get back together.
Yeah, absolutely. It sounds great.
You're at Carter Thomas on Twitter.
Yep. That's the best
And
place.
that's it. Hit him up on there. Hit him up. He definitely like broke my mind there when we were going back and forth on I had a completely different perspective on like prop trading and what you could do with some spare time. And I thought I knew what I was doing. And then all of a sudden he's like, you can also do this for another 15 minutes. And, so get at or follow Carter at Carter Thomas on Twitter. Anything else?
That's it, man. Buy Bitcoin.
Buy Bitcoin. Though Ethereum's going to be the one that help out. I got my shirt on today.
There you go.
All right.
Cool,
Well,
man.
thanks. We'll wrap it up here, and we'll do a version 3 coming soon.
That sounds great.